Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we've got Michael D. Raimondo with us, and Michael is moving into the famous crypto tokenization world of commercial real estate. So Michael, it's great to have you. If you could just speak a little bit about how you got to this point in your life, that would be great.
Yeah, it's Mitchell, but
Oh, I'm
it's
sorry. What did I
no,
say?
you're all good, all good. No, yeah. So I grew up, Bay Area, played golf, learned about Bitcoin back in like 2012. Was going the whole D1 golf path, but when I was graduating in 2016, I really saw the value in the tech, and I was like, look, this is an investable asset class, but you need institutional grade assets to kind of backbone it, where regulators can underwrite it. So we set out and we're like, look, the only way institutions can get into the space is if they can control the risk. And really the only way to control the risk at that time in crypto is to trade the volatility. So we were really trading volatility for the first, 4 years, from 2017 to, 2021, 2020. So we saw the good, the bad, the ugly. And when I graduated, I realized I was like, scale is the game here. And I went to my father, who's the founder of Steelwave, big commercial real estate group out here. And I go, look, Barry, I think my world and your world are going to mesh here. And I don't know when it's going to happen, but when it does, it's going to unlock an unbelievable amount of capital. And that's really what started the journey. So we've been kind of early to it. We've been in this whole tokenization realm for about 5 years now. We've seen what's worked, what hasn't worked. And we're really trying to, provide and be the backbone for the product that's going to be the next generation of the whole Web3 blockchain space.
So tell us, for those that are uninitiated to the tokenization of real estate, just give us a quick primer on how this would work.
Yeah, I mean, you can think of it like crowdfunding. I mean, there's been multiple companies that have kind of done this through the traditional channels, right? Like Fundrise and others. But the really unlock with tokenization is you can fractionalize it down to the smallest denomination, and you can do it anywhere in the world, right? So I can all of a sudden start taking a deal, it's a $100 million cap stack, and sell, dollar tokens in Africa. The regulation's not there yet, and we're starting to kind of see it get there. But in theory, it really completely democratizes finance, especially from these private assets that really the minimums and the requirements of, what an institutional grade investment is, all this stuff have really gate kept for, all the time.
So basically, if I'm hearing this correctly, a owner of a building could take a portion of their ownership and essentially tokenize it and sell it off for $1 or $10 or whatever number someone wanted to put into the
Yeah, you can
tokenization.
sell the building, you can sell the cash flows. It's really, it's limitless in how you want to structure that token offering. But yeah, it's kind of taking the old model and spinning it on its head and going, okay, we're going to allow infinite optionality for the owner operator, as opposed to the, pretty restrictive requirements that are in place right now.
So would an investor be able to basically get in and out, kind of like buying stock and getting in and out of a stock ownership?
Exactly. That's kind of the whole goal of it. It's taking these large illiquid assets and creating almost like a liquidity class in it. And that's great for, family offices that have capital in, and it's good for investors that want access to assets they previously wouldn't have access to. So it's a win-win for everyone.
So what's the hang up with the regulators? Why are they scared of this whole thing?
I think, look, the previous administration really believed in regulation through enforcement, right? Which definitely stifled innovation. Now, I think with the current administration, the people that are surrounding, they're really looking to make the U.S. the hub for this technology. They know it's been going on globally, and they don't want it happening outside of the U.S. They want it happening here. So they're creating guardrails to operate in, right? You saw the Genius Act go through last year, which really focused on the whole stablecoin offerings. Clarity is going to come through, which will really define what's a security offering, what's not a security offering. And then once you start to get these guardrails, it allows innovation to come in, and we can get creative with what the offerings actually are. But again, it's waiting on government. They're never known to move fast. It's just getting the right people, having the right conversations, so people actually understand what this technology can do. And when people that's half my job, is explaining, this even exists. And that's the disconnect right now.
No, that's interesting. I mean, in my unlimited, very limited knowledge of this, it seems like stablecoin has set a precedence for actually moving into the tokenization of commercial real estate. I mean, Stripe bought a stablecoin business just recently. So anyway, it seems like everybody's kind of moving in that direction.
Yeah, and the next buzzword you'll hear is yield on chain. That's the next thing, right? That's when all of a sudden you're getting a current return on your coin. That'll morph into, okay, people want money market funds, simple security. Think of like what Robinhood did with OpenAI or SpaceX and stuff like that, right? But when it really starts to click, you'll start to see these private offerings coming out, right? And that's where the real unlock is going to happen, is when it's not even real estate, right? You can think real estate, you can think of PE, venture capital, early stage liquidity and series A, B, C. Like all of a sudden you're taking this tech and you're applying it across the board of all these assets that really have had, for lack of a better term, rules on who can play in the playpen. And I think a lot of that's been on purpose. So the fees stay high, and this kind of shakes that whole system apart.
Well, it seems like the tech guys would be the first ones in, obviously, to bring it to a different realm. That commercial real estate might be kind of last on the list, but maybe I'm wrong about that.
Commercial, yeah, you're right. I mean, I'm surprised people don't have eraser marks on their computer screens in half of these commercial real estate firms, right? Like, I think what happens is real estate comes in last, but real estate's the biggest scale. Right? Some people can wrap their head around. It's tangible, it's real, and it's something that international markets have a huge appetite for right now. So I think that's kind of the perfect storm we're seeing in the whole real estate space.
Yeah, no, it's going to be very exciting to see what happens here, and hopefully the regulators get off the dime at some point and are able to move this forward. But who knows? So what's your sort of crystal ball saying about all this?
I mean, look, I still think we're early, and everyone's like, "Oh, we missed out on the opportunity." It's like, look, I think the players aren't even on the field yet for this game. I think what you're going to start to see are the projects that have the best assets behind them. May it be real estate, may it be, look at what Circle's doing, look at what Galaxy's doing. The ones that start to be the leaders are the ones that you can start to see to set the precedent. We're very heavy on the groups that are bringing real world assets onto the main scene. I think that'll be the next push. That'll be the next bull run. I think you're going to see the evolution of this whole NFT craze go into, well, instead of owning a trading card, why don't I actually own a stock certificate derivative, right?
Right.
And I think that's where this is going, and you're getting your retail investors smarter. I think that's something that hasn't happened in ever, and that's the real next push.
It seems like NFTs, I mean, to me, that's like kind of smoke and mirrors, that there's no real asset there. But
It was the same thing in remember in 2017, it was like the STO, and then it went to the ICO, or it was the ICO to the STO. The ICO is like, okay, you could raise around anything. I almost say that's the NFT phase. Now we're stepping into the STO phase, right? Where it's like, now you actually have a backing. You have to understand what's there. And I mean, look, the bull markets create wealth. Bear markets create knowledge, is the way I tell people.
That's a great phrase. I hadn't heard that before. That makes sense. Well, it sounds like we could talk about this for another couple days, but I think we both have hard stops here. So, Mitchell, where can people get a hold of you?
Yeah, I'm very active on Twitter. Our website, steelwavellc.com. You can kind of see our portfolio, the real estate side of it. But yeah, no, I think, look, we're always posting stuff, getting this out in front of everyone. I'm speaking a bunch. I'll be at Bitcoin 2026 consensus, bouncing around all the conventions. So just reach out. We'll be there.
All right. Well, I want to see more of this. Maybe we'll talk again in 3 to 6 months and see what's happening at that point.
No, I'd love that. Thank you again for having me.
Thanks again, Mitchell.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.